How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on US dollar versus the Swiss franc. As we can see, price has exploded to the upside. We just ran out this look back 20-day high. This would not be our current one. I had a conversation with a mentee earlier that this would become our 20-day high if this candle closed higher than that one. That's what I was simply trying to say. But besides that, we know that the Feds have a 5.5 interest rate. The Swiss National Bank has a rate of 1.25, so there's a huge interest rate differential. They recently just cut their rates. I think they were 1.50. They cut it by 0.25, a quarter. Now they're lowering their rates. Now, if they lower their rates, everybody's going to most likely go into another fiat currency that has higher rates, and the dollar is what it has. It's higher for longer, so I'm assuming eventually everyone's going to leave their current fiat currency and slowly pour back into the dollar if the Feds don't cut rates. We're going to see things like EU, AU, GU, NU sell off. And as you can see, if we just briefly take a look at Euro USD, we had this gap up. I'll clear this off. We had this monthly opening gap up, get traders to chase those longs, right? They missed that opening gap, so they're going to try and chase longs. Comes back to haunt them. You see how price was all the way up here at one point, and now it sold all the way back down to the open and continues selling lower below the open. So clearly getting retail traders potentially on the wrong side. Unless it continues trending bullish, then we'll speculate something else. Take a look at AU, bearish, NU, bearish, small range candles, and last close candle counter trend. So if this is a bearish leg that's unfolding, lower swing highs, lower swing lows, after up small candles, right? Double confluence there. I'm stacking two ideas on top of each other. So one, it's an up close candle, and it's a small range cycle. So two ideas here. Monday sells off. UJ still trending up. That swing trade from last month, we don't have to talk about that anymore. Still trending. These are going to be definitely one of my favorite pairs to trade because we know that they're going to take advantage of the yen cross carry trade. Remember, it's $1 trillion carry trade that they're making off of the yen depreciating in value. But back to USD Swissy, not to get distracted. We know seasonally dollar's supposed to be bearish, but we know seasonally that doesn't mean it's going to happen because price action may do something completely different. It's going to say seasonally DXY is bearish, but instead we get a bullish dollar. So far, we can see, right, still early, still the first week, first trading day of the month, we saw price come down and run underneath the monthly opening price. Now, if it's going to have the characteristics of a bullish month, a swing low is going to form below the monthly opening price because it's a chance to get the retail traders in short to chase the wrong direction of the price. It's a false break or a false move to get them go short, and then it goes long, higher swing highs, higher swing lows, just like how we saw with the US dollar versus the yen last month. If you take a look at the Swiss futures, let's come down to that. Big push down. Huge push. So you can see at a small up close candle too, price is selling off. And I said this in the previous episode. I don't think it's on TradingView, but in the previous episode, we talked about how price can sometimes not give traders that Judas swing. Sometimes it outright just sells and continues trending lower. And sometimes vice versa. It outright just buys and continues going higher, not allowing people to get that discount buy. So you have to find other ways to get into the market. I normally like to gauge buying below the open because that's the easiest way to get the best buy. But if price does not come back down below the open, because we know there's some months where it opens, it probably does run down just a little bit and then it runs up and it's gone, right? The train has left the boat. But we know characteristics of how to get into that trend. So if we get any down close days, we could buy after that. Even if it's consecutive down close days, we'll buy that as a new buying opportunity or signal and look to see if price is going to trade higher. We are currently in a premium range now. So I wouldn't be surprised intraday there's going to be great sell ideas counter to the trend. So though price action may be bullish on a higher time frame, there might be lower time frame entries to be counter and catch those intraday scalps or intraday trades during the New York, London, or even Asian session. So keep that in mind. I am still going to be bullish on DXY. I truly think that the Feds are going to suck all the currencies out from other countries and get investors right back into the dollar. That means I take the stance that gold might sell off. It might consolidate based on geopolitical tensions that we have going on, all the wars and conflicts going around in certain countries. But I think sooner or later, gold is very overbought and it's going to sell off. Unless it just becomes range bound and it's sideways for a couple months and then it makes a new leg up or down. I do want to see it sell off personally because I'm taking the stance that dollar is going to go against its seasonal tendency, not be bearish and be bullish. And Swiss is not going to be bullish, it's going to be bearish. So hopefully you found this insightful. Peace.